Ladies and gentlemen, welcome back to the channel. We have everything you need to know on AMC Stock here in this video. The stock is down 3.66% on the day. Pretty rough day in the markets for a couple of reasons. Obviously, we got that downgrade last night from Fitch, and you did get some strong jobs report numbers today. So there's some interesting things going on, and we're going to get into all of that here in this video. Take a look at the Ortex data, take a look at the Stonko tracker data, the FTD numbers for the day today. I think that is a story in and of itself. So let's go ahead and get into it. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. So AMC stock, like I said, down about 3.5%. Pretty good day considering the NASDAQ is down about 2%. So you're seeing a lot of strength and resilience in AMC stock here on the day today. The stock is at $4.76 per share. You hit that low of $4.68. I'm telling you right now, anything can happen. The last time you got a downgrade from a rating agency was back in 2011, and the S&P fell about 21% within the following couple of months. Now, Tom Lee over with Fundstrat just put out a warning for the month of August, saying that basically everyone has gotten so bullish at the top, and we're probably going to get good jobs reports, and you know, there's a strong case for why the markets could be weak in August. Seasonally, it's weak in August as people are off on vacations and trading volumes can be lower. You're a little bit more vulnerable to a fall. So we'll see ultimately what happens. Now, if the markets do fall, that could actually be a big positive for AMC if you're someone looking to capitalize and make some money on a potential short squeeze. That's going to dry up liquidity, and that's ultimately what you need to see. I was going to say want to see, but you really need to see some liquidity get drained out of this market. The fact of the matter is people just have too much money. Now, in regards to the shorts that are short in AMC, they've been losing a lot of money for quite a long time. With those cost bar fees, it really messes everything up. Like you almost can't make a profit at this point on this core arbitrage trade. Just because the fees have been so high. Now, let's focus in on this downgrade here for just a second. It says Fitch downgrades U.S. long-term rating to AA+ from AAA. Now, they put us on negative watch back in May, so this is something that we kind of expected to come. Now, they pointed to expected fiscal deterioration over the next 3 years, an erosion of governments, and a growing general debt burden. The repeated debt limit political standoffs and last-minute resolutions have eroded confidence in fiscal management, said Fitch. I said, in Fitch's view, there's been a steady deterioration in standards of governments over the past 20 years, including on fiscal and debt matters, notwithstanding the June bipartisan agreement to suspend the debt limit until January 2025. Fitch also highlighted the rising general government deficit, which it anticipates will rise to 6.3% of gross domestic product in 2023 from 3.7% in 2022. So quite an uptick. Cuts to non-defense discretionary spending, 15% of the total federal spending, as agreed in the Fiscal Responsibility Act, offer only a modest improvement to the medium-term fiscal outlook. They also expect a mild recession in the fourth quarter of 2023 and first quarter of 2024. Now, the White House obviously disagrees with this, but Fitch also makes a really strong point that government assistance or programs, maybe I should say, like Social Security and other things, are basically going to run dry in a couple of years. And the government has yet to do anything about that. And that's simply not what a AAA rating for a country would look like. We have a lot of problems. But they say AA is still very good, which that's true. But there's some problems that need to be worked out. Well, markets today obviously don't like a downgrade. You really haven't had downgrades in the past too often. Back in 2011 under Obama, and now in 2023 under Biden. Maybe you can see a trend there, maybe not. But not good. So the S&P is down about 1.17%. The Nasdaq is really getting punched in the face, down about 2% today. And this comes at a time where the markets were almost at all-time highs. Earnings have been okay, but they haven't been great. Look at something like an AMD. I mean, that stock is dramatically selling off today, down about 6% because their earnings show nothing from AI helping them whatsoever. So the markets are definitely, pockets doing better than others. Some are doing worse than others. But overall, today is a massive liquidity drain on the markets because nothing's really doing well. Everything's kind of just going down. Now, what is doing well is bad for equities, and that is bond yields. So bond yields on the 10-year Treasury is 4.11%, almost 4.12%. This is almost a new high of this cycle so far. This is up almost 7 basis points here on the day. This is pretty bad news for anyone that is an investor in the markets. Now, this could just be the first move of many to come, and that's where the problem comes in. Now, specifically with the broader markets squeezing out liquidity, Amazon and Apple earnings are going to be pivotally important for the market. If Apple or Amazon have bad earnings, well, you're going to be in for quite a problem. All things considered, the U.S. credit rating just got downgraded. When these downgrades happens, which they don't happen often, right? Last time it happened, the S&P fell 6.5% the next trading day. I mean, if you look at the Nasdaq, you're already down 2%. It could get even worse throughout the rest of the day. So definitely not a good thing when credit ratings get downgraded. But what that actually does is, as you're seeing in the bond market, it forces the U.S. to pay higher interest rates on its notes, bills, and bonds. So exactly what's happening is what you would expect to see. And if this continues to go higher, as it looks like it probably will, you could be in for quite a problem a week or two from now. So we'll ultimately see. Now, as far as AMC stock goes, AMC is on the threshold securities list. Cost to borrow max at about 366%. Cost to borrow minimum 306%. Cost to borrow average 357%. Cost to borrow fees are jumping here today, now sitting at about 170% from Interactive Brokers. This is up from yesterday's number at about 140%. So seeing a marginal increase here with the cost to borrow fees from Interactive Brokers. Point in being, these fees are hundreds of percents. It doesn't matter if they're hundreds of percents or 1,000%. It's doing the same job, and it's squeezing liquidity out of this market at really a pace you don't want to see. If you're a hedge fund or institution, right? The last thing you want is cost of borrow fees this high and this process just taking forever in the courts. Now, this is bullish for you and I, but that's obviously what the hedge funds don't want to see happen. Now, AMC stock is still on the threshold securities list. No surprise there. We're going to look at the FTD numbers in just a second. You got about 30% short interest of free float, 153.47 million shares that are currently sold short as well. So short interest, very high. If you look at short interest of free float, it's probably higher than 30%, considering you and I own a lot of shares of AMC. So what's that free float really look like? Well, it's hard to narrow that down precisely, but if the numbers are anywhere, similar to where they were in 2022, then this short interest of free float could be over 100%. So we'll see there. Option activity. Strangely enough, it looks like this one option is getting bought over and over again today, and that's the September 15th $4 put. You have seen 9 orders totaling $1.01 million with a positive order value of 19%. Little bit strange, a little bit different. You're actually seeing positive order value at 19%. The average of the last week was 9%. Yesterday's positive order value was 2%. So the positive dollars heading into AMC options is actually 10 times higher today than it was yesterday, which is definitely strange, but overall a positive for you and I. Now, if we look at the FTD numbers, well, today is August 2nd, so you're going to have about 12.7 million FTDs that do need to be covered. And then over the next, again, couple of weeks from now, you're going to have over 10 million plus FTDs every single day. This is a big problem for hedge funds and institutions. It really creates that level of supporting buying pressure on the stock. Although this doesn't have to be the reason why the stock does go parabolic, it does its part in at least stabilizing the stock. If you have a constant flow of buying pressure, that has to be met with more selling pressure, and that's not exactly what you have been seeing to the degree that we have seen over the past year or so. Any other time over the past year, 18 months, if the NASDAQ was down 2%, AMC would be down much more than 3%. AMC marginally underperforming the markets just by a little bit. You would have expected to see this much, much worse, but that is not happening. So you're really seeing strength and resilience here on the day with AMC stock. But again, tomorrow, as far as the broader markets, you're going to get Apple and Amazon earnings. And for context, Apple is larger than the Russell 3000, 2000, and 1000 put together. The market cap of Apple is over $3 trillion. It's egregiously overvalued. And when you're egregiously overvalued, you just got hit with a credit downgrade for the U.S. economy. That's only happened twice in recent history. And last time that happened in 2011, the S&P fell 6.5% the next day. You're down 2% today on the NASDAQ. That's not really a good recipe for the markets heading into Apple and Amazon earnings. Kind of makes me a little bit worried for PayPal. I have a pretty big position in that. But nonetheless, if you guys want to come trade with me live in real time, link down below in the description of this video. PayPal will be reporting earnings here in after hours. And let's go through some of the other earnings as well. You got PayPal, Shopify, Qualcomm, Oxy, Unity, Robinhood, Mercado Libre, Energy Transfer, Etsy, APA Corporation. So that's what's currently going on. Again, just a quick look at the technicals. We bounced right off of that 450 level. You kind of gapped up from the 450 level. You came down, you filled the gap, you went back up, and now you're kind of in this middle zone, and you're kind of showing a bullish trend. Like, bullish technicals are intact here, which is honestly quite impressive considering all that is going on with the markets. Now, AMC, as far as the RSI, is at 51.42, and the MACD is still in positive territory. So all things are not doom and gloom. We have to wait and see, obviously, what happens to the markets. But most importantly, this court proceeding with AMC, that's going to be the thing that really moves the stock up or down in a big way, as we've seen before. And to be quite honest, I've said it before and I'll say it again, I don't care which way this thing goes. You crush the arbitrage traders, right? If the judge does not let this go through, or you crush the short thesis as a whole if AMC can raise billions and billions of dollars of capital. That's the only reason why shorts have not covered, is because if the arbitrage trade does not go through, then AMC is looking at a greater chance of bankruptcy, and that's also a negative. Although what we have seen recently, if you look at Tupperware stock going from 60 cents per share all the way to $5 after they announced they might go bankrupt. So inevitably, maybe that bankrupt possibility leads to a rally. Who knows? But point being, I think there's a very strong bull case here rather than a bear case. It's hard to make a bear case given where we are currently sitting, but it's hard to pinpoint these things day by day, so it can take some time. You got to be prepared for that. If you are playing options, play those longer dated options. You want to give yourself as much time as possible, especially when this thing could be very explosive. You don't need to go super close to the money and a week or two with some of your options. You can go a little bit further out and take 6 or 12 months on the options, or even longer. The longer, the better when it comes to those options, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comments section. You guys have a great rest of your day, and I will see you in the next one.